From New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Westin. We start, as always, with the markets and what's going on, and Abigail Doolittle is here to take us through it. So, Abigail, when I woke up this morning, I thought it was risk-off, but maybe it's changing its mind.
I would say it's jittery right now, David, somewhere between risk-off and risk-on. But to your point earlier today, yes, it did feel a bit risk-off, and that, of course, is the dollar found a little bit of a boost before the ECB meeting. That was sending stocks down, and, of course, stocks in Europe lower. At this point here in the U.S., we're looking at mixed moves, and the virus, David, seems to be coming back into play. Before we talk about that, though, we do continue to see this move into the cyclicals. We see the S&P 500 financials up about 0.9%. That is helping the S&P 500 be down less than the NASDAQ. The S&P 500 down about 0.3%. The NASDAQ 100, which is actually over the last 2 days, if you can believe it, David, against this current environment, been flirting with an all-time high, or I should say a record closing high, right now down about 0.4%. This as investors move out of tech, the stay-at-home stocks, into those cyclicals. But on the day, there was a sharp leg lower because right around 11 o'clock, stocks up about 0.2%, now down. And that came on the news that the Florida COVID-19 cases rose 2.4% yesterday relative to the previous 7-day average of up 1.6%. So this fear that everybody has, David, around the idea that will these protests and a reopening in the United States cause some sort of a spike or second wave, perhaps proven a little bit there in Florida, but one day does not a trend make, although I think that their cases were a little bit above yesterday. But you can see the reaction in stocks at this point.
Yeah, as you say, one day does not a trend make. At the same time, we're all on tenterhooks a bit to figure out what happens, particularly in these states that opened up a little earlier than others. One of the things that struck me is airlines. How about airlines? Talk about the COVID-19. We actually have some airlines bursting back now, saying maybe air travel is coming back, at least a little bit.
Yes, American Airlines in particular, very positive, and that's helping the Dow transports trade to the upside. But American Airlines boosting their flights in the air on pent-up demand, many saying that millennials are willing to get back into the air. So that could certainly help a beaten down area of the economy, not helping the overall market so much right now, but the Dow transports, which have been down more so. Certainly that is a trend, a more positive, encouraging trend around the pandemic to keep in mind, David, if it continues.
Okay, what's going on with the dollar? Abigail, we've been talking about the dollar the last few days, and as the dollar weakened, the stocks went up. What's going on with the dollar? Is that explaining anything what's going on with the equities?
Well, so earlier today, the dollar had been slightly higher, and that was pushing the U.S. futures lower. It was probably weighing on European equities. However, after the ECB offering more support than expected, the euro up sky high. That's pushing the dollar down once again, down about 0.5%. So ahead of those Florida numbers, David, the dollar being down once again seemed to be boosting stocks up, because the S&P 500 had been up about 0.2%. But again, on that possibly negative news out of Florida, taking a little bit of a leg out of stocks, even though the dollar is once again down, now down, I believe, for a 6th day. Really pretty remarkable. Today, not on the Fed, but on the ECB, those central banks that play, David.
So, Abigail, the other thing we've been talking about recently is bonds, whether there really is a rotation out of bonds and into equities. We've been waiting for that to really reinforce the equity rally. What are we seeing with bonds today?
So bonds are once again selling off. So that suggests, again, that makes the picture overall neutral, because while you do have stocks a bit jittery at this point, investors not looking to those haven assets. As for your question as to whether or not we're going to see a rotation into bonds, it's really pretty interesting. That is truly the trillion-dollar question, because there is technical reason to think that we could see a move out of bonds, bonds moving lower, investors not wanting those havens. If that occurs, where is that money going to go to? One particular spot, of course, could be stocks, suggesting the rally could have legs, but it's way too early to say. Something to keep an eye on for sure, David.
Okay, last one, commodities. What's going on with commodities? That's something we like to look at. Oil, but also copper.
Yeah, oil earlier was down, and if I take a quick look now just to make sure that I give you the latest data, we are actually seeing a little bit of a turnaround here. The Bloomberg Commodity Index up about 0.4%. We have oil still off. As for your question about copper, it's up about 0.3%. That's such an important commodity to keep in mind, David, because oil at this point to me feels a little bit like a casino play, since it's been down so much and up so much. But copper, a true tell on the global economy, Dr. Copper, so up just a little bit, and overall commodities are higher. So that, again, adds to the mixed messages of the day, since that's a little bit risk on, even though we have stocks mainly off just a little bit, David.
We did get some economic data out earlier today from the United States. We did get some economic data, and the jobless claims numbers were down a little bit from what they had been before, although still robust. Did the markets react to that at all, Abigail?
There wasn't so much of a reaction there. In terms of that data, though, the more important thing perhaps in the initial jobless claims, while very encouraging, going below 2 million for the first time since the pandemic, the continuing claims above what was expected. So that really supports the idea that this economic recession trough, this problem around employment, could last longer and be more painful than some think, and certainly what the markets up 40% from the March lows seem to be pricing. And that's something else to keep in mind as well, David, that economic data and that jobless picture. And of course, tomorrow we're going to have non-farm payrolls for the month of May. That will be very interesting to see how the markets react to that number when it comes out tomorrow at 8:30, David.
Exactly, Abigail. That's going to be a terribly important number that we get tomorrow morning about 8:30 Eastern time, jobless numbers, the non-farm payrolls numbers. But at this point, is it still a little too early to tell where the jobs numbers are going? Because there's still a lag here, and it's not exactly clear that fully we'll be seeing the reflection of what's going on with COVID.
That's an excellent point, because, of course, we've had this first wave of folks, unfortunately, sadly, tragically, losing their jobs amid the pandemic. And at one point in 1 week, the jobless claims greater than 6 million, I believe, steadily going down. But in terms of the overall slide in jobs, there's lots of thought out there, including here with Bloomberg Economics, that there could be a second wave of job losses, and that it could actually be for the white-collar job, because the slide through from the pandemic, it's probably going to take a very long time. There's a big commitment by many companies to not make layoffs. But as the economy slows and less revenue is coming in, you may see some of these companies, in particular, there was one bank a few weeks ago that broke the pledge among banks, if you will, Cantor Fitzgerald, laying off other folks. You have to wonder whether that's going to happen with other banks, with law firms, with other white-collar jobs. That could provide continued pressure on the jobs picture to the downside, sadly. Hopefully that does not happen. But my personal sense of this is that it could take a really long time for all of this to play through the system, maybe much longer than what some folks are expecting. And certainly what the markets are pricing in, again, up 40% from the March lows.
Okay, Abigail, thank you so much for that terrific review of the markets in some detail. That is Abigail Doolittle. In the meantime, Abigail mentioned a couple times the ECB, the European Central Bank, took action this morning. It was expected to take some big action. It actually did a little more than what was expected. And to take us through what it means, what its significance is, we're joined by Megan Green. She's senior fellow at the Kennedy School up at Harvard. So, Megan, thank you so much for being with us. Give us your take on what was important in what the ECB did and what effect is it likely to have?
Yeah, so this was the ECB being really bold and proactive, even if it's not as much as the Fed has done, for example. But for the ECB, this was a big move. It increased its bond purchasing, the PEP program, by more than expected. It also extended it by 6 months, and that wasn't expected. But it also announced that it would be reinvesting the bonds that were maturing over the course of the next couple of years till the end of 2022. And that piece is interesting because normally the ECB is somewhat beholden to its capital key. And the capital key is determined by the size of each country's economy. So the ECB can buy up bonds according to it, which means they mainly had to buy German bonds and then French bonds and then Italian bonds because the German economy is the biggest and the French and the Italian. And the ECB has been moving away from this capital key a bit already with the PEP. But the reinvestment program means that they can actually even things out according to the capital key by reinvesting the bonds that are rolling off. So they don't actually have to buy up bonds according to the capital key. They can kind of sort that out later over time through their reinvestments. And so it's a bigger step away from the capital key, which means they can step in and be more active in terms of buying up bonds for the countries that really need it. And I think that's probably the most important piece of what they announced today.
So what was the urgency? Why did they need to do it? I mean, everyone expected it. I suppose there would have been a lot of disappointment if they had not done it. But what are the financial conditions like over in Europe? They'd already taken a fair amount of action back in March. Do they really need to really loosen up financial conditions more?
Well, they did. I mean, if you look at the economic data in Europe, broadly, it seems to be bottoming out and stabilizing. So we have found the bottom for most European countries. But based on the bond purchasing that the ECB has already done through this program, they were going to run out of money sometime this autumn. So they didn't actually have to announce more so soon. They could have waited longer. But again, this was more a signal that they're going to whatever it takes, and that, they're going to prevent fragmentation in the Eurozone. And also it comes alongside a bunch of fiscal as well. So the German government just announced a huge fiscal stimulus program, which everyone's very impressed by. It's worth pointing out that Germany did this also back in 2009. So, countercyclical stimulus seems crazy. And Germany does do that when it needs to save its own economy. And then the recovery fund that's still being debated among European capitals is potentially promising more in a kind of taken it to do proactively. But I think it's that in conjunction with a bunch of other fiscal measures that might be changing sentiment for some investors.
So, Megan, that was actually my question about the fiscal. To what extent is there some relationship between what the ECB is doing and the possibility of fiscal, not just Germany, but also the 750 billion euro that's been talked about by Ms. von der Leyen? Are they really making it easier for governments over there to borrow money on the fiscal side by keeping the rates down, the costs down on the monetary side?
Compressing borrowing costs for countries, and that only helps because, of course, your debts think about when you're looking at debt sustainability. But and right now, for most of the Eurozone and also for most of the developed world, borrowing costs are incredibly low, and that's the biggest role that central banks are actually playing. So that does help, but with the recovery fund in particular, they're looking at actually issuing AAA European securities, and so that will have its own borrowing costs, which should be really low given that it's European and given that the credit rating is so high. And so that should come with really low borrowing costs as well. And the important thing about that is that it's borrowed as debt, but it's given out as grants to countries. So it is a fiscal transfer of sorts. If we don't know all the details, we don't know all the conditions. They're busy kind of horse trading over it still, but it probably won't be a game changer for any of the countries that really need it. And Italy comes front and center. Yep. So Italy might get around 25 billion euros out of it. That won't be added on to its debt, and that's helpful. That's not a game changer for Italy, though. It's more important in terms of the political signal that it's sending that actually Germany and some of the other northern European countries are agreeing to any kind of risk sharing at all and any kind of fiscal transfer. And it's not macroeconomically important this time, but it can be beefed up again in the next crisis. So it is a bit of an open door politically.
Okay, Megan, really appreciate you being there. I apologize to our audience for some of those technical difficulties, but we heard enough of what Megan Green had to say, which was important. That's Megan Green. She's a senior fellow up at the Kennedy School at Harvard. Coming up here, we're going to talk with a congressman from just outside Los Angeles. She is Judy Chu, about what's going on in her district and Los Angeles more generally. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Westin. We turn now to the turmoil that's really rocked the country in the aftermath of that brutal killing of George Floyd out in Minneapolis. It's hit so many cities, including Los Angeles. And we welcome now Judy Chu, who is Congresswoman from just outside Los Angeles, Pasadena, and the San Gabriel Valley. Welcome, Congresswoman. It's good to have you with us. First of all, give us a sense of what's going on in Los Angeles and in your district right now with respect to protests and potential violence. Are things calming down at all?
The protests continue, and I have to say I'm very, very impressed by how much they have indeed calmed down. Actually, I have to say that there were opportunists that tried to take advantage of the situation so that they could engage in their own criminal activities. But the people who support the Black Lives Matter movement have prevailed, and the vast majority of the protests have been peaceful. In fact, they've only grown. Just yesterday, there was a huge protest in front of Los Angeles County, and they expressed their point of view that change has to happen, and finally change is indeed happening.
So give us a sense from your perspective of the role of the police in this, because as you just outlined, it's difficult. You want to let people exercise their constitutional right to petition for redress of grievances, but there are, as you said, opportunists that really create violence. What's the proper role of police? And very specifically, there are reports today that Los Angeles wants to cut back on the budget for the police. They think maybe we're spending too much on police. We need to spend more on communities. Where are you on that?
So Los Angeles has actually been very responsive to the protesters, and they've shown a great deal of restraint for the most part. The police officers have tried to talk to the protesters and engage in a conversation with them, and in fact, several of LAPD have taken a knee with the protesters. So that is why I think we've seen a transformation of these protests to largely peaceful ones, and where we've seen actual cooperation between the protesters, the police, and even the National Guard. Let me say, with regard to the demands of the protesters for less money for the police, I see it as more money for the community. And in fact, that is what Mayor Garcetti was really emphasizing. We know that all the budgets of cities and states are going to take a huge hit due to the coronavirus. But if there is money in the budget, where should it go? What Mayor Garcetti is showing is that it should go to helping to provide more opportunity for young people, for people who are desperate right now, who have lost their jobs, who don't know where to go. And that's what I heard him saying, that he is going to find the money to make sure that there is more opportunity for people, because people are protesting the violence, the rates of the killing that has happened, especially with the black population, but they're also protesting the lack of opportunity, and we have to be able to give them hope. At the same time, we have to make sure that those who are committing these murders are held accountable, and that's why it was so important for there to be 4 arrests of the police officers in Minnesota. The reaction that we see right now is because there was irrefutable evidence that these police officers actually killed George Floyd. There it was, right on the video. And so people have said enough is enough, and it's really astounding to see the multi-ethnic protests that have happened, because so many people across America can see that this is wrong.
Well, let's talk about that for a moment, because we are all understandably and appropriately focused on our black brothers and sisters across the country and the experience that they've had. But there are other minority communities as well. And you have both Asian Americans and Hispanics in your district. How are other minorities experiencing this from their point of view, both from the sense of they're being discriminated against, but also some of their businesses, some of their homes are in jeopardy?
Well, thank goodness we took some steps forward, and now the protests are largely peaceful, and they've controlled the opportunists who've tried to do the looting. But what we see that the Hispanic caucuses and the AAPI caucuses, certainly in Congress, have stood by the black caucuses and the black community in fighting these terrible injustices. That is why I organized a press conference with the Tri-Caucus yesterday to show our unity, and that is why I'm hosting a national Asian Pacific press conference to show that an attack on one community of color is an attack on all of us. And in fact, the press conference is tomorrow. Now we have statements by over 150 Asian Pacific Islander groups that have condemned the murders of George Floyd and other African Americans in our country. And the reason that I think they have come forward is because we know that we all have to speak out when there are terrible hate crimes and brutal injustices, such as the anti-Asian coronavirus hate crimes and incidents that have been occurring in the last few months. But there is also just historically all these acts that have occurred, like the Chinese Massacre of 1871, the Chinese Exclusion Act of 1882, the murder of Vincent Chin in 1982, and the continuous targeting of Chinese American scientists and engineers as spies and criminals. So we have to do something. We have to come together as a nation and support one another in fighting for a better America.
Okay, thank you so much for being with us, Congresswoman Chu. That is Congresswoman Judy Chu from California. Coming up on Balance of Power a little later on, we're going to talk with Jeffrey Sachs, the scholar and the author, about the systemic effects of inequality, something he's written about in his new book, Ages of Globalization. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Our stock of the hour, believe it or not, is American Airlines, because it's up because it appears that air travel may be coming back. And to explain that phenomenon to us, we now welcome Kaylee Lines. Kaylee?
Yeah, David, American is up in a big way. It's higher by some 26%. Best day for the stock in about 2 months. And bluer skies really just earlier than a lot of people expected. American announced that it's upping its capacity for July by 74% from current levels. They're going to fly about 4,000 flights on the busiest day of the month. That's up from about 2,300 flights in June. So this is a big relative improvement, really, because they say there's been a surprise rebound in travel demand. The company executive said that the consumer is, quote, hungry to travel as shelter-in-place orders start to lift across the country. But this is really domestic, David. International still pretty weak. They're planning to fly less than 20% of last year's overseas capacity. Plus, we have to keep in mind that the planes that they are flying, both here and abroad, have fewer people on them to support social distancing. And I would note, too, that this is by no means a normal scenario when you compare it to last year. They're only going to be flying about 40% of the capacity from July. But this may just be a picture of the new normal starting to look a lot better. And that doesn't just apply to American. Basically, half of the top stocks in the top 10 of the S&P 500 today are airline stocks. A big rally. They're all up double digits today, David.
Thank you so much to Kaylee Lyons. Coming up next, Professor Jeffrey Sachs of Columbia. And he's going to talk to us about inequality, about globalization, and about the digital age. That's next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We have breaking news now on the Bloomberg. Just as we were away, Sheldon Adelson's Singapore casino reportedly is being probed over money laundering of checks, and the Las Vegas Sands stock is down sharply on the news. We'll keep you apprised of that as it develops. But now, with First Word News, we go now to Mark Crumpton.
David, thank you. The next round of economic stimulus for pandemic relief could be as much as $1 trillion. Bloomberg has learned Trump administration officials have delayed talks that were scheduled for this week. More than 40 million people lost jobs since states began restricting public activity in March. More than 10,000 people have been arrested in protests across the country since the death of George Floyd last week. That's according to a count by the Associated Press. More than a quarter of those arrested were in Los Angeles, followed by New York, Dallas, and Philadelphia. Many of the arrests have been for low-level offenses, such as curfew violations and failure to disperse. Hundreds were arrested on burglary and looting charges. China will ease its ban on foreign airlines beginning next week. That after the Trump administration demanded the country reopen to U.S. airlines or face curbs on its own carriers flying passengers to America. The coronavirus pandemic prompted flight cuts earlier this year. Iran is reporting a record surge in coronavirus cases for the second straight day. There were more than 3,500 new infections in the past 24 hours, the highest Iran has seen since March. Iran, which has been the epicenter for the virus in the Middle East, now has more than 164,000 cases and 8,000 deaths. It began relaxing lockdown measures in early April. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Jeffrey Sachs is University Professor at Columbia, where he teaches and writes on the subject of development through the ages, sustainable development in particular, poverty, and healthcare. He has now written a new book, just out, which is a comprehensive treatment of economic and social development really throughout history and around the world. It is called The Ages of Globalization. And we welcome Professor Sachs now back to Bloomberg. Great to have you here. Really
David, thank
good
you so
book,
much.
terrific book. I want to pick up on one specific aspect, which is very timely, I think, right now. We are now in what you call the digital age, the seventh of your 7 ages. And you say one of the challenges of the digital age is inequality. We are seeing, I believe, most would say, some effects of that sort of systemic inequality in the United States right now in the demonstrations we're seeing. What are the root causes of that perpetual and, frankly, growing inequality? To what extent does globalization or digitization make it worse?
I think digitization has played a big role in both raising overall output, but shifting it to a smaller and smaller part of society. And the COVID epidemic is probably going to result in a dramatic increased concentration of wealth. Think about it. Jeffrey Bezos, owner of Amazon, founder of Amazon, has increased his wealth by an estimated $35 billion since the start of this year, at a time that we have mass unemployment. We have the greatest unemployment, the largest loss of jobs since the Great Depression, rivaling the Great Depression. And yet the stock market is up, and some of the big tech titans are booming in their wealth. So what's happening, I think, is that we're seeing this dramatic wiping out of a large part of our economy, the brick and mortar sector. A huge amount is shifting online, and that is part of this digital trend that already has been leading to the concentration of income and wealth. When the dust settles, I'm afraid we're going to probably have the greatest increase of inequality that we've ever had in a short period of time.
Which is saying a good deal, because going into this, before the pandemic, we were not in great shape on inequality. It was growing to a substantial degree. There are remarkable statistics I know you've seen that, for example, back in 2016, 2017, the net worth of the median African-American family was 10% that of the median white family. So we had a problem going in. And then, as you point out, if you look at the COVID loss of jobs, it was greatly disproportionate on Hispanics and on blacks. What can we do to remedy that at this point? Because what we're seeing right now, I think, is certainly about police brutality, but it's about much more.
It's probably the case that when the calculations are made carefully, that the richest 20 Americans or so, all white, I believe to be the case, have more net worth than all the financial wealth of the African-American 40 million people in American society. I don't guarantee the number. I say this has to be looked at, but these are the relative orders of magnitude that we're talking about. The top billionaires, if you take the top 20, 30, have well over $1 trillion of net worth. Now, that's something like the financial wealth in the African-American community of 40 million people. It's stunning what is happening in terms of the shocking, unbelievable, unprecedented wealth at the very, very top. Bezos himself with $150 billion of net worth, something we cannot get our heads around. And then people losing jobs by the tens of millions, with absolutely a disproportionate burden being felt by minority communities. This is desperate. What do we have to do about it? We have to become a decent society where everybody has access to health care, everybody has access to education. You don't have a generation of students with $1.5 trillion of debt now completely unpayable because the prospects have worsened dramatically, but it was unpayable beforehand. And that requires companies like Amazon to pay some taxes, not to ask for tax breaks from around the country, but to pay their taxes. It requires the richest people to pay taxes. It requires, in my view, a tax on wealth, which is so concentrated right now that we're going to wake up. In fact, we're not even waking up. We know it. We see it. We're awake right now that the budget deficit will be some 20% of GDP, perhaps. And then we're going to be told by the conservatives representing the voices of the richest people, oh, we can't do any more. We're going to have to cut benefits to the poor because of the large budget deficit. So it's an extraordinary time by any standard, David. And the concentration of wealth, not a deliberate part of this epidemic, but it seems to be the fallout of the epidemic is extraordinary. One more point I would add on this. The Fed has, of course, issued trillions of dollars of new credits. But the way our system works, it's not credits for a broad society. It's credits that go through the already large concentrations of wealth and allow them to buy up even more of the assets on a fire sale basis. So easy Fed credits after 2008 was part of the increased concentration of wealth after 2008. Now we're seeing it again in 2020 that what the Fed's doing to keep the economy from collapsing is also going to have an effect on increasing the already almost unimaginable inequality of wealth.
And what is the solution for that? Because I suspect that's a law of unintended consequences. I don't think that Janet Yellen said in 2008, 2009, or I'm sorry, Ben Bernanke said, let's make sure that we have money sent to the people who already own a lot of capital. But they did decide they needed to do this to save us from a depression. We may be having a version of that right now, but an unintended, I suspect largely unintended consequence is if you inject a lot of liquidity in the marketplace, it sticks with the people who own capital. And by definition, those are the wealthy. What can be done about that? How can you save the entire economy and not benefit the richest?
Well, first of all, right now, like you say, you take emergency measures to stop the economy from going into a Great Depression, free fall. The most important thing to do, by the way, which is the one thing we're not doing effectively, is public health across our country to stop the spread of the virus. If we don't do that, no matter how many stimulus packages we have, we will not keep ahead of the epidemic itself. Amazingly, we're not taking the most basic steps of contact tracing, isolating, and the physical distancing as a national standard. And so we're falling farther and farther behind the Asia-Pacific countries that have already brought the epidemic under control. But the next step, the one you're asking about, is we're going to see very soon the horrific inequalities that have come from this worst crisis of modern history. Then I believe we're going to have to face that directly, heavily through a fair set of policies that give decent wages to all workers, that give universal access to health and education and leave time, which has been unfortunately so prevalent because of the epidemic itself, and to rectify some of the huge inequities of tax breaks for the rich or no taxes at all for many of our leading companies, and especially in the tech sector, and loophole after loophole, which enables these now mega companies to avoid any social responsibility. Right. If we just have national income flowing to this very small, high-tech corporate sector, this is what's going to happen.
Right. Okay, Jeffrey Sachs, thank you so much. I'm delighted to say he's going to be staying with us so we can talk some more about that book, The Ages of Globalization, and apply some of what he's talking about to the entire globe. That's coming up next. In the meantime, we have some news breaking right now. Zoom Info has just gone public, and it has opened at $40 a share. The IPO was set at $21 a share. So it looks like all of us on Zoom all the time are helping the company. There's a little more wealth being created, I dare say. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Back with us is Professor Jeffrey Sachs of Columbia, who has this new book just out, called The Ages of Globalization. So, as I said, Professor, this is really, for me at least, a comprehensive view about development of the human species, going back to 70,000 BCE in the Paleolithic era, actually. But one of the things I took away from your book, and I want you to tell me if I was right, is globalization is almost inevitable. We've always been globalizing through migration, through various activities. And overall, I think you would say, on average, over time, it has been good for the species. We are healthier, we are better off, we are more comfortable because of globalization. Is that part of the overall message of your book?
It absolutely is. Globalization enables us to share ideas, enjoy diversity, specialize, use our comparative advantages. It does what Adam Smith, the founder of modern economics, said in 1776, a bigger world that exchanges technologies, ideas, and goods and services will be a wealthier world. And that is the history of globalization. But globalization also brings turmoil, it brings disruption, it brings inequalities. And so one can't say that it's only an unalloyed good, and indeed it has brought the spread of a pathogen worldwide in a very short period of time. Some people say, okay, we got to close down. This has been tried at times in history. At the start of the Great Depression, countries went protectionist. It turned out that only made the Great Depression vastly worse than it otherwise would have been. Now, if we follow the same course of saying, because we have a pandemic or because we're in competition with China or whatever claim is made that we have to stop globalization, we would do a lot of self-damage and worsening of our situation. We should direct attention to the ills that we see and know, fighting pathogens, combating extreme inequalities, not stopping the flow of people, goods, services, ideas, which are, on the whole, for human betterment.
And yet, globalization, I dare say, was getting something of a bad name, not just in the United States and not just under President Trump, but in much of the Western world before the coronavirus epidemic really hit us. So there was a sense that we really need to build up the borders some more. And one of the things you talk about in your book is the role of institutions and the effect that they can have on globalization. What can we be doing right now? Because the world doesn't seem to be coming together. What should we be doing through our institutions to get the best out of globalization?
Well, we need to cooperate and we need rules. And we made a lot of progress under the U.S. created idea of the United Nations and its institutions. But I'm afraid the U.S. started to get cold feet about the idea of a rule-based system. We started to pull away, for example, getting out of the Paris Climate Agreement, which I think it was a terrible mistake because climate change is another mega crisis that we have to face. And then recently, the administration pulling out of the World Health Organization. I can only tell you, being involved in fighting the epidemic itself and also hearing from governments around the world how horrified other parts of the world are at the U.S. absenting itself from the global cooperative cause. We are pointing fingers, we're making blame, but the truth of the matter is we're in the middle of a global battle of humanity against a virus, and we ought to be cooperating urgently in order to make the world safe. We haven't made the United States safe for Americans. We haven't really contributed to making the world safe, and cutting off help for the World's Health Organization at the height of this battle is not the right way to serve our purposes or to serve the world's needs.
Okay, Professor Jeffrey Sachs of Columbia, thank you so much for being with us. Once again, he has a new book out called The Ages of Globalization. I highly recommend it. I've read it. I learned a great deal, as I always do, from Professor Sachs. Coming up, we're going to talk about President Trump's difficulties with some of his military. We're going to have retired Brigadier General Mark Kimmett here to tell us about the relationship of President Trump at this point with the military. This is Balance of Power on Bloomberg Television and on radio. General Jim Mattis, a former defense secretary, came out yesterday in strong terms on the Atlantic website and said that he really disagreed strongly with what the President Trump had done, particularly in that Farragut Square incident. This departed from a policy he had long had of not commenting on the present President of the United States. Here to give us some sense of the relationship today of President Trump with his military, welcome Mark Kimmett. He's retired U.S. Army Brigadier General. He also served as a Deputy Assistant Secretary of Defense and as an Assistant Secretary of State. So, General, thank you so much for being back with us. It looks like
Sure,
President Trump is losing some of the support he had from the military. What is your perspective?
Well, I think the major concern that the military has is that this situation right now has gone from being an issue of law and order to one of being partisan conflict, and the military being put in the middle of that and potentially being politicized.
So is the military prepared to deal with things like crowd control as a practical matter? I mean, put aside the legality of it, is it a smart use of federal troops?
Well, I think it's a mission that the U.S. military could take on quite easily. We've done it for years and years. We've done it under this situation 5 times in the last 50 years. L.A. riots, Detroit riots, post-Hugo looting that was happening down in the Virgin Islands. So your military can pretty much do anything that it gets sufficient time and training on so that if the order is given, they do it as well as they should and can.
So as a former Brigadier General, how remarkable did you find it that Jim Mattis would speak out the way he did? As I say, he had been steadfast before that in saying, I will not comment on this President of the United States while he's serving in office. And boy, he certainly commented yesterday.
Well, I think he did, and so did Admiral Mullins, so did General Allen. And behind the scenes, a number of other 4-stars are criticizing the president heavily. The issue is not necessarily can the president do it, it's should the president do it, and how would the president communicate to the American people on how to do it. And I think that's really what has happened. As Jim Mattis says, this is a president that is dividing the country, not uniting the country, and he's really concerned that he now will divide the military from the American people rather than bring them together.
It's fascinating. We also had the civilian leadership of the Defense Department yesterday. Mark Esper, the Secretary of Defense, come out and say he thinks it would be a bad idea for the president to invoke federal troops to curtail some of the civil disobedience. What about that when the civilian leadership starts saying we disagree with the president as well?
Legally, he's on firm standing when the president wants to do that. I think it's important to remind your audience that this was done 4 times in the 50s to ensure that the desegregation laws that have been put into effect by the federal government were enforced by the governors down in Alabama and Mississippi. But this isn't the time to do it. Again, we don't want the military to be seen as the Praetorian Guard for this president. It is a military that serves the people, it serves the Constitution, it serves the commander-in-chief, but in that order.
General, you've had so much experience in CENTCOM and other places with our security situation around the world. Are you at all concerned that because of the civil disputes here in the United States, both the demonstrations, the riots, and then the reaction from the White House, that we may be taking our eye off the ball from a national security position around the world?
I really don't. I mean, we've got combatant commanders around the world at CENTCOM, at EUCOM, at INDOPACOM. They're not focused on what's happening inside the United States right now. They're too busy keeping their eyes, you say, on the ball in India, Pakistan, Middle East. So I wouldn't worry about that in the least.
Well, let me ask a related question. You were at State Department as well as the Defense Department. To what extent may we be undermining our position of moral authority around the world to really remonstrate with other countries? Today is the anniversary of Tiananmen Square. is it a little more difficult right now for the President of the United States, if he were inclined to do so, to condemn China for bringing in the troops on those demonstrators over in Tiananmen Square, given what he's considering?
Well, I can tell you in the Middle East, there's a little bit of schadenfreude going on, particularly in countries such as Egypt and Iraq, where they're saying, look, the American was quick to condemn us when we were in the same situation they are in now. So you're right, we have lost a little bit of our moral authority. I think it will be important for this current situation to resolve itself, not only in the long run, but in the short run, so that we can get that moral authority back when we start working with our allies.
Thank you so much to General Mark Kimmett. Coming up in the second hour on radio, we're going to talk with Joe Watkins. This is Bloomberg.